Hey, it's Sebastian with NFM Lending. Thank you so much for watching this video on how to properly budget to reach all of your financial goals. I hope you enjoy the video. If you have any questions, make sure you comment below. Make sure you like the video as well and subscribe so you can get access to more financial and home buying tips. Now, with that being said, here is some really important things to think about when budgeting. Number one, budgeting is not the same as tracking spending. Tracking spending is when you are paying attention to how much you spent every single month, which is a really good start. But a budget is when you set a limit on how much money you are going to spend before the month even begins. Okay, next thing, you really want to make sure you are reviewing your budget at the end of every month so you make sure you did not overspend, and also so you can adjust for the following month. Each month is different. You want to make sure you are able to adjust. Third thing to keep in mind is change your mindset. This is not a punishment. This is part of who you are. And if you surpass the budget, you are only lying to yourself. So it's not going to help. Next, plan your financial goals backwards when creating your budget. I'll talk a little bit more about this when we get to the savings section, so stick around. And lastly, go easy on yourself. You're a human being and things come up. You will get better with budgeting as time goes on, so no need to worry. Now, the simplest way to budget is called the 50-30-20 method. The way this works is you're going to calculate your net income, your take-home pay after taxes, and then you're going to calculate your total monthly expenses, every reoccurring monthly expense that you have. What you're going to do after that is you're going to label each of those expenses as either a need, a want, or a savings/debt repayment. What you're going to do is you're going to take 50% of your net income and you're going to put it towards your needs. Then you're going to commit 30% of your income towards your savings and debt repayment. And then you're going to leave 20% towards your wants. Now, how do we divide this up? Great question. So your needs are things you absolutely need to pay every single month, and you are not able to skip a payment without it heavily affecting you financially. So anything that could really damage your credit score, things like rent, mortgage, car payment, utilities, insurance, and then also the minimum on your personal loans and credit cards. There is a reason we are only including the minimum, and I'll explain that in a little bit, so stick around. Anything in this category, you're going to put 50% of your income and make sure it covers all of these expenses. If 50% of your income does not cover these expenses, then you really need to look at your financial status and situation and either find a better paying job, a better paying opportunity, or limit your spending in some of these categories. I've seen people with extremely high car payments where it's more than some people pay in rent, and that is not a very good way to achieve your financial goals. So you might need to reprioritize and either downgrade the car for a little bit until you are able to get your finances in better shape. Okay, the next category is 30% of your income is going towards savings and debt repayments. This is to ensure you have some money put away for a rainy day, save for your future plans, and pay off your debt. How this works is you're going to split this 30% in two parts. 15% is going towards your savings and investments, and 15% goes towards your debt repayment. For your 15% in savings, priority number one is to establish a rainy day or emergency fund. This is where you have at least 6 months worth of your total needs expenses in a high yield savings account, preferably online in case of an emergency, a loss of job, an accident, sickness, etc. You want to have at least 6 months put away, and you do not touch this account. The reason why it's particularly online is because it takes 1 to 3 business days for that to transfer to a checking account, so you will not recklessly spend this money. High yield savings accounts, if you don't know what they are savings accounts that pay you more interest for having your money. So don't leave your money in a big bank that's only going to pay you 0.01%. That's 1 penny for every $100 that you have saved up. Go for those high yield savings accounts. Go to Google, search best high yield savings accounts interest rates right now. and you will get tons of options. I personally bank with American Express and I love them. So if you want to use American Express, I'll use a description below. I'm not sponsored by them or anything. I just really like their customer service and I've been using their platform for a lot of years. Right now, it's January 2023 and their interest rate for savings accounts is at 3.3%. So $3 for every $100 annually. It's a great deal. Priority number 2 towards your savings accounts is max out your retirement, especially if you have a 401k that your employer matches. That's free money. Make sure you're maxing out what they can give you every year. If you don't have that option, make sure you open an IRA or speak to a financial advisor about all of your retirement account options so that you are putting money away for your retirement, even if it's just $100 a month, $50 a month, into an index fund like an ETF or mutual fund. Over the course of many, many years until it's time to retire, compound interest will ensure that when you retire, you'll be ahead of 80% of Americans in retirement age. So this is extremely important. The earlier you start, the better it is for you. And priority number 3 is saving for those big ticket items. Once you have everything else saved up for, make sure you start really saving for your housing, your car, your wedding, luxury items, etc. Because you don't want to be buying a house or buying a car or paying a giant wedding if you don't have an emergency fund set up and if you don't at least have your retirement account started. Why? Because if something goes wrong with the car, if you need a repair on the house, if you need anything, you want to make sure you have an emergency fund to do that and you're not tapping into those credit cards. And that takes us to the debt repayment section. 15% of this 30 is going to be priority number 1, paying off your highest interest credit cards and personal loans. The reason why we're only doing the minimum on all the other credit cards is you want to make sure you put all your extra money towards the highest interest debt first so you can get rid of it as soon as possible. Once it's paid off, you stop using this account and then you move on to the next. You rinse and repeat until you are completely debt free. Once everything is completely paid off, you don't have any of this toxic debt, the entire 30% in this category goes towards your goals, housing, car, vacations, increasing your emergency fund from 6 months to 1 year. Anything else that is in your goals, now you have 30% of your income going towards that. And the next section is 20% of your income is going to be going towards your wants. This is your monthly allowance. This is the fun part. And you need this because if you don't have any funds saved up in your allowance, it's less likely you're going to stick to it. So you want to make sure you put at least 20% of your net income towards the fun stuff, your entertainment, going out with friends, etc. What's important is that this will be different for each individual. What may be a want for someone, may be a need for someone else. So this is really up to you what you put in this category. But if you're eager to get out of debt as soon as possible, some wants maybe need to wait, right? Until you're in a better financial situation, until you have more savings or your debts are in order. But make sure you are not too strict with this section. Tips on budgeting: use every single dollar that you earn. Everything needs to go either in the 50%, 30%, or 20% category. You either need to pay something off or save it. For your goals to work, make sure you work backwards. If you need a certain amount of money by a certain amount of time, work backwards. If I need $5,000 in 1 year, I'm going to divide that by 12 months to know how much I have to save every single month in order to get there. To save on your groceries, make sure you plan your meals out in advance at the beginning of the week and use like or similar ingredients. That way you're not overspending at the grocery store. Next, once you've paid off all of your credit cards, find one with the most points and most benefits that you can exploit. I say that but in a good way, to make sure that you are only using one credit card. That way you're not getting lost in all these different payments, and make sure you are getting as many points as possible that you can redeem for future travel. It's another way to save money. And tackle the highest interest debt first and repeat until you are debt free. So if you have any questions on how to budget for buying a home or any questions about the home buying process in general, go to SebastianHomeLoans.com for a free consultation where I'll gladly speak to you and make sure we have a plan put in place to help you reach your goals. Comment below if you have any questions. Make sure you like the video and subscribe for more videos like this and more financial and home buying tips. I hope you have a great day and thank you so much for watching.